Welcome to the 24HourFlex benefits presentation on flexible spending accounts. So why would you elect one of these benefits? Well, you don't have to pay taxes on any money that you put into one of these accounts. Whether it's a dependent care account or a medical FSA account, the key is the tax savings average about 25%, and that's real savings. So now who can participate in these benefits? All benefit eligible employees, as well as their spouses and dependents, can participate. The IRS has set the current maximum for medical FSAs at $2,550. This number can change year to year, so just keep that in mind. These accounts are pre-funded, so you have full access to that election from day one of the plan year. Payroll deductions throughout the year will cover the pre-funding of the account. Covered expenses include medical, dental, and vision related expenses. So if you're planning on getting braces or new glasses, these plans would be great for you and help you save some money. A couple side notes on these. Orthodontia is the only thing that the IRS allows to cross plan years. For example, you may get your braces this year and make payments on them over the course of the next couple years. The IRS will let you use funds from a subsequent plan year to pay for the orthodontia. As the orthodontia will likely cross plan years. For glasses, the plans will not cover warranties, so make sure you pay for the warranties out of pocket. Moving on, of course, the unexpected medical needs that arise throughout the year, things like x-rays, prescriptions, over-the-counter medications would be eligible. Over-the-counter medications do require an OTC prescription from your doctors, so do keep that in mind. A general rule of thumb for eligibility is that cosmetic expenses like teeth whitening, veneers, plastic surgery, and the likes will not qualify. But to help guide you, you can find a more detailed list of eligible expenses on our website. Just search for eligible expenses. Next up, we'll take a look at dependent care FSAs. These are accounts designed to help with things like daycare for children or adult dependent daycare. The IRS has set a maximum per household of $5,000, which means that spouses cannot each make an election of $5,000, but rather could each elect $2,500. So just keep that in mind that it is a household maximum. The accounts not only have a higher limit than the medical FSAs, but they also function a bit differently in that they are not pre-funded like the medical FSAs. They are funded by each payroll deduction. So you start the plan year with a balance of zero and work towards the plan year total. A couple key things to remember for these include the age limit for children, which is set at 13 by the IRS, and also keep in mind that receipts will have to be provided. But to help, we do have a dependent care receipt form that you can use, and they just require a signature from the provider. They'll have the dates on there and so forth, and you can use that as a receipt for your expenses. Eligible expenses include day camps, daycare, nannies, preschool, and the likes. Other things like overnight camps and kindergarten tuitions are not eligible. A few key rules outlined by the IRS are displayed here. Number one being a change of status, for example, new baby, divorce, etc. A change of status is the only way to make changes to an existing plan mid-year. And you must notify us of the change of status within 30 days of the change. Otherwise, these plans cannot be increased or decreased once they are in effect. The next big thing to keep in mind, money set aside in one area cannot be used to pay expenses in another. So what that means is you will not be able to use dependent care funds for medical expenses and vice versa. And the third important rule to keep in mind is that these are use it or lose it benefits. Expenses must be incurred by your final service date, and claims must be filed by your final filing date. After this point, funds are lost unless your company participates in the optional IRS allowed rollover. Everyone will receive a debit card. This allows the vendor to conveniently be paid immediately, whereas the alternative is to simply file a claim for reimbursement on out-of-pocket expenses. All card transactions must be substantiated with a couple exceptions, so please save all the receipts. Just like tax documents, the IRS recommends that you save your receipts for 3 years. So the rules for substantiation of card transactions are pretty simple. If the transaction is equal to a standard copay amount, then the transaction auto-substantiates. If the transaction matches exactly a previous card transaction, that means same amount, same provider, then the transaction auto-substantiates. Finally, if the transaction clears through a merchant's IIAS system, then the transaction auto-substantiates. And that is simply an inventory system that most pharmacies have these days that pretty much tells the card if it's an FSA eligible item. Any transaction that doesn't fall within one of these categories will require a receipt for substantiation. But statistically, 85% of all card swipes are auto-substantiated. Should a receipt be requested, we will request that via one of two methods, either by email, if we have one in the system, or by snail mail, if we don't have an email in the system for you. If a receipt is not received within 45 days of the transaction, then the card will be suspended as per IRS regulations. Of course, please give us a call if you have any questions about what we're asking. And just a reminder, keep all of your receipts for tax purposes. So what is a valid receipt? A valid receipt contains date of service, description of service, and the name of the vendor and the amount that you're responsible for. Also, if the vendor is unable to provide an itemized receipt for you that has the information that we need, then you may always use an explanation of benefits from your insurance or an EOB. Those are always great receipts. So the alternate method for using your money is to file a claim. So there's the card, and then you can also file a claim. This is when you pay out of pocket, you file a claim for reimbursement, and then you get reimbursed either by check or by direct deposit, which is much faster. The quickest way to file a claim is the mobile app, followed closely by your consumer portal. Speaking of consumer portal, our website is a fantastic way to get all of your FSA needs taken care of. It's easy to use. It allows you to file claims, check balances, manage your direct deposits, view expenses, learn about the benefits, and a whole lot more. The companion, which in my opinion is a little bit quicker, is our mobile app. It's available on iOS and Android devices. It's called 24HourFlex Mobile, and it gives you quicker access to things like claim filing, viewing your balances. One of the cool features of this is that it allows you to use your device's camera to take pictures of your receipts, and it uploads them directly to your account. So pretty slick. So now, how do you sign up? Step 1, decide how much you want to set aside each year. Step 2, enroll by completing the 24HourFlex participation form. Then you're on your way to saving hard-earned money. Finally, remember that we are here to help you. You can visit our website to live chat with someone who wants to help you. You can also view helpful videos and training material. You can access your account and much more. And just remember, don't hesitate to give us a call. Our team is available Monday through Friday, 7 a.m. to 6 p.m. Mountain Time at the number 800-651-4855. That's it. Thank you very much. I hope you all have a great rest of your day.